Welcome to the daily briefing. It is Wednesday, June 3rd. No end to the drama in the meme stock mania. There's so much more that we have to talk to about bonds, equity, credit. Plus, we are going to have a special dispatch from Ed Harrison and Ash Bennington. They are both at the Bitcoin conference in Miami. But for all this and more, I am joined by Real Vision's Weston Nakamura. Weston, how are you doing?
Long time no see, Jack. How are you?
I'm doing well. Weston, what time is it in Tokyo right now?
5:16 a.m. Friday.
And you've been up this whole time. You trade the New York U.S. market, so you're on Eastern time, right?
Yeah, sure. We'll go with that.
Pretty much. So Weston, what were you looking at today? A lot of oddities today. AMC plummeted in early market hours because of a share offering, but the market soaked it back up, and it ended, well up on the not on the day, but relative to that low level. Then we have new entrants into the I don't want to keep on saying meme stocks, but a new entrant into the hyper technical moves in stocks. Workhorse, which is a darling of electric vehicle investors. It's a what's known as a spec, a little bit more speculative than your company like Tesla or a Ford, Volkswagen. That was up 28% today. That's the close. It was actually up much more earlier. It faltered a little bit. And by the way, the whole stock market was somewhat dragged down by this action. I actually don't have the closing numbers in front of me, but the Nasdaq was down. I think about a point.
Yeah, basically 1%, 36 basis points down on S&P, and Dow's down. Who looks at Dow? Who cares? Yeah.
The Dow is a fake index. The largest stock in the Dow is United Health Company because it's price weighted, not market weighted. So I don't consider the Dow a real index. It's illegitimate as far as I'm concerned. But Weston, I'm super long-winded. What did you make of today's action?
Yeah. So obviously, AMC was front and center. I don't know if the stock, but yeah, the stock certainly was. The options certainly were. So we have about just under 600 million. AMC volume, I believe you said it was like the largest, it was the most volume traded, more than SPYs. Doesn't surprise me because once again, there is just an insane amount of open interest out there. So pre-market, the stock was actually, I think it was up, I don't know, 20 something percent. Then you have this announcement come out from corporate saying, essentially saying the same thing that the hedge fund said yesterday, that we're overvalued and we're issuing shares. This is not the first time that they issue shares. They file with file 8Ks and all that kind of thing. And the speculative call buyers I was talking about yesterday, the ones who the froth traders, right? The ones who are buying crypto and then going from GME calls to crypto to Doge to back to AMC and so on and so forth. They don't care about an 8K filing. They don't read that stuff. And that's why in the pre-market, what I sent out a note on the exchange saying, whatever happens with the stock today, understand that institutional investors read these kind of documents, and institutional investors trade in the pre-market. The price I actually see right now with the stock being down pre-open is institutional investors. Everything thereafter is going to be, by and large, by the retail army, which even AMC acknowledges that their shareholder base is, hence the bribing of the popcorn and all that kind of thing. That said, though, you did see some last-minute shorts come into AMC on the actual equity itself. So hedge funds are coming in. It's a very hard stock to borrow. It's very expensive to borrow, and yeah. So you saw somebody just starts slamming shares at the open, opening shorts, and it seemed to have worked. But then the stock got back to flat, and it's just basically all over the place. So we'll see what happens. Expiry is tomorrow, and I think that about something like around half or so of the open interest is going to roll off, and with that is going to go a lot of the hedging exposure positions that the market makers hold, and that they're all going to unwind that as well. So if this story just keeps continuing to Monday and all that, then you could very well see potential upside there too. But for now, AMC is not like being abandoned. There are put option there are put positions now being opened. This is not a forgotten sort of stock just because it kind of whipped around directionally today, and it's spreading into, as you mentioned, some of those other, we can call them meme stocks. Meme stocks.
Yeah, Weston, the note you referred to, the 8K, when they issued the stock, I'm gonna quote. They said, under the circumstances, we caution you against investing in our Class A common stock unless you are prepared to incur the risk of losing all or a substantial portion of your investment. This is on an official filing. So I kind of thought of it, Weston, like you're watching TV and there's an advertisement for an allergy medication, and then they tell you about the side effects, where they're like, side effects include, and then they list all of these really nasty things that you'd never want. But people, they still bought the medication.
That is not the appropriate analogy. The analogy is DARE. I don't know if you know what DARE is. Maybe you're too young. Drug abuse resistance education. It's like, you learn about, not taking drugs in school. But instead, what happens is kids learn about drugs and are introduced to them via that very program. So basically, they're saying like, don't buy this unless you want to have like speculative exposure with a ton of upside and like limited downside. If it's very dangerous. That probably had people like watering at the mouth instead of cautioning them away from it, right? So I think that it did the exact opposite. It was almost like a probably subconscious but marketing tool. So.
That's a good point. One other thing on the share issuance was just that because it was at such an extremely high price, they didn't have to issue that many shares. They issued, I think, about 11 million shares, 11.5 million shares, and they were able to raise $722 million just with those 11 million shares. Whereas earlier in the year, they sold 187 million shares for $3 a share. So they rose earlier in the year. They raised. Sorry, 1 second.
So the thing is that
they raised $597 million early in this year, selling 187 million shares, and this time they raised more, $722 million, selling only 6% as number of shares. So it just goes to show, the eye-popping price appreciation and how that has a real impact on how this company can secure financing.
And the fact that the dynamics of supply and demand for share issuances, all that, doesn't mean anything when we're talking to a community of people that are buying Dogecoin, which is purposely meant to mock this system and be an inflationary cryptocurrency. None of that matters. Prices can go up with an increase of supply. Like they're just turning like traditional, textbook macroeconomics or economics in general, supply and demand cross, like just on its head. So none of that is a deterrent. Everyone, like I said yesterday, nobody's buying this company because they want to own common stock in AMC Entertainment Corp and have like voting rights, and that's not what this is all about, right? This is just purely a buy high, sell higher, be prepared to lose 100% of your premium, YOLO trade. That's all it is. And,
yes,
and anybody who's like analyzing it, deeper than that and reading the 8K, you are missing. Like, you should stay away from that stock.
Well, Weston, you're right that this is not a fundamental thing at all. It doesn't have to do with the cinemas that are opening, the new app, the new service. It doesn't have to do with any of that. It is not based on expectations of future earnings. It is purely sentiment and based on technicals. I will say, Weston, the fact that new shares have been issued, that is a really important technical factor. Wouldn't you agree? Even if it is in a SEC filing.
So you're saying because there's more supply, yeah. So that does actually matter more so than like fundamentals on the earnings or something like that, right? But again, Dogecoin is supposed to be like an inflationary asset, right? They print more Dogecoin, they print more shares of, or they issue more shares of AMC. This is like none of those things have any effect on the price at all. In fact, it seems like because there is this like insatiable, unconditional bid for these assets, be it AMC or Doge or whatever it is, because of that, that's why they do take advantage of that and issue, more supply. So, if anything, these traders are enabling these executives. It's not really, not the other way around. But yeah, in a normal environment, yeah, I would suppose that like a share interest, yeah, you get diluted down. Nobody is calculating like, oh, how many shares outstanding? What, that's not how it works. None of these people are going to execute their long call options. Like they're not going to, exercise their options.
Yeah, and I'm relieved that there's so much less of the Wall Street mob, justice trader, people who are trying to get over on Wall Street. I don't think that is the primary motivation of people. I think they just want to make money, and I'm glad that we now can recognize that, and that in some cases retail traders can do much better than institutional players. Weston, you mentioned short sellers. I think that AMC had a relatively high short interest of 20%. Of course, nothing compared to the 144 or something percentage of GameStop, but yeah, relatively high. Do you think that additional shorts added on? Because you said that you think that the early price weakness was short sellers. Do you think there was a bear raid, and do you think that bear raids even exist? Because I have some my own thoughts on that.
Well, so even before, today there were, there was like a lot of borrow right before the open. So I'm assuming that I'm assuming that that's done off of that headline to be executed at the open. But even like yesterday, after market, I was like looking at some of the data from like various brokerage accounts and all that, and yeah, by far AMC is the hardest stock to borrow, and it's like it's 10% funding and all that because of the relatively low float. So what I think is that just because there's borrow, though, that doesn't mean that shares have been sold short. So if I were a hedge fund and I were out of my mind and had forgotten that Melvin just got blown up, like 3-4 months ago, or in January, and I would decide to short one of these companies again, if I were to do that, what I would do is I'd borrow the stock. But you don't have to do it all in one clip, right? Just the same way as you scale in and out of a position. So you short some, and then knowing that the stock might double tomorrow, and if you do, you kind of average up in this case, and you short some more, and you short some more, and so they just keep piling in and in and in, and then eventually, and you just hold some dry powder, and eventually you get a day like today, and then you slam the hell of the stock down, and hopefully that will manifest into a positive P&L. I don't know that it will, because the stock is clearly very resilient to these sort of headlines. So,
yes, you mentioned that the AMC stock is very hard to borrow. That makes me think of the Turkish lira, which is also notoriously hard to borrow, and because it is borrowed and sold short so much. Obviously, the price action in the Turkish lira has been abysmal. Absolutely very, very bad. And Weston, I know you have a lot of charts, so I'm going to ask you some questions about that later. By the way, the price action in Tesla today also the price action was very abysmal. That was down something like 4%. But Weston, I want to ask you, because Gabrielle Alvarez has a question. Can these meme stocks crash the market? What do you think about the relationship between the meme stocks and the market? Is it a micro bubble that's going to pop, or could you see some real contagion? So
I don't know what by crash the market means, but can they impact the broader market? Yeah, they can. This is what I was talking about yesterday. This is the problem with this is how Robinhood essentially saved the day by accident by putting a cap on the otherwise nonstop GME buying spree that was going on. And because if that were to continue, I mean, it wasn't just Robinhood. That was Interactive Brokers was in the same situation too, right? So you're basically you require so much more margin from the system, and then you have these issues with T+2 settlement that they're trying to shorten and all that, and there's a number of things that go wrong in a number of different ways, but all you need is basically one of these players to kind of default or to not be able to come up with their margin, and somebody's left with holding the bag. And if it's an institutional player, I mean, the Fed is probably not in a politically good situation to bail out an institution per se, and you can't really bail out individuals. And so it's somebody's going to be basically left in the back. And so I think that, like, broadly speaking, yeah, this is very balance sheet intensive. For the market makers, are getting torn up today, and it's not a healthy thing for markets for this to continue. So I'm glad that AMC did kind of cool today, but who knows?
A lot more to get into. Weston, I think it's time to go to our friends Ed and Ash, who are right now in Miami for the 2021 Bitcoin conference. They're sharing their experience. I'm hearing that the weather has not been so clement to them. I'm hearing that there's a little bit of a rainstorm, but I think that they've sort of gathered in a room to share their thoughts. So let's play that clip, and then when we be back, Weston, I want to ask you about Workhorse. I want to ask you about the Turkish lira. I want to ask you, you got your eye on European bonds, the dollar. People in the comments are questioning about reflation. But first, let's go to this clip of Ed and Ash in Miami.
Thanks, Jack. Hey, by the way, here we are in Miami. You can see behind us, we have we're in a hotel. That's because we just got downpoured on. We've only been here one day, but we're at the Miami Bitcoin conference. Ash and I are in the same room in person for the first time in 15 months. And we've got some thoughts about how we're thinking about what's happening in the crypto space and in global macro, how those two are coming together here in Miami. Ash, why don't you tell us what you're thinking about?
Yeah, it's great to be here. First of all, we apologize for the quality of the video. We're literally shooting this from my iPhone here. This is like guerrilla filmmaking. You're getting dropped in to this Bitcoin conference. I've been here since last night. I got down very late, and it's just been an incredible sort of vibe when you get here. I don't want to use the word euphoric because that implies like all kinds of bubblicious types of sentiments. That's a different conversation. But what's happening really on the ground here is there is a very positive sentiment here. The reality is, as I was just, Ed and I just had lunch together, and we were talking about this with some people from the macro side. And the reality is there's a feeling here on the ground when you go to this conference, when you're out at the bars, when you're at the cafes, when you're at the restaurants, that the people who are in crypto, this is the perception, this is the vibe at least, is that you and all your friends are the smartest kids in the room. And that is a very intoxicating feeling. And so it seems to me like there's very positive sentiment coming into the space. Obviously this is something that I'm talking about here from a very sort of short-term tactical angle, but there's definitely a feeling of just exuberance about this technology. There's a feeling of validation. I think people have been locked up in their apartments, for 12, 14, 15 months, and people are out. They're hanging out with their friends. There are Lambos rolling down the street. Their music bumping off the tops of the drop tops. There's just definitely a feeling here of this is the place to be right now.
Yeah, when you say that, I'm thinking about Miami, the song by Will Smith, talking about his drop top. The interesting bit for me, actually, because I've been here for a day, and I went to dinner last night that was hosted by real money investors. These are institutional guys. And the sense that I'm getting is that Miami is a sea change. It's a sea change in terms of how institutional money is thinking about crypto as a space, because everyone's coming together at this conference. This is the first sort of, post-pandemic, full reopening conference. And they're saying, okay, now we can meet people face to face in the way that we did before. Yeah. Let's get into what this space is doing, what's happening here, what's the regulatory environment, what are the opportunities going forward, how do we as institutional global macro individuals get access, allocation to this particular sector. That's what I'm seeing people saying. They're saying we're interested, but we're interested only if there are, above board ways for us to get into the space. And we want to find comfort based upon the conversations that we have here in Miami, that we can do that.
Yeah, I think that's right. And, that's what I just described earlier was the mood here. On the more substantive level, as Ed points out, I think that's exactly right. The word diversity comes to mind. There's a very diverse array of people here. You have the cool tech kids in T-shirts. You have the folks who are from the macro side. You have folks who are from the traditional investing side in suits. there really is a sense, and I think Ed's right, there's definitely more skepticism, obviously, as you would expect, on some of the more seasoned investors' behalf. I think that will surprise no one. But there's also the fact that, look, they're here. They're on the ground. They're asking the questions. They're exploring the opportunities. And they're here because they want to understand what this technology will do in the real world. I've heard a little bit of skepticism, as I know Ed has as well, about what the real world applications for these things, for these emerging technologies, these emerging networks, these emerging protocols, what those applications are. But the reality is traditional investors, the suits, so to speak, for lack of a better term, these are folks who have a lot of other things they could be doing, and they got on a plane and they came down to Miami and they're here to listen. And I think that in itself is an important lesson.
You know, I would anecdotally, let me just tell you two things. I think Ash will tell you the second, but the first is that, as you know, I've been like basically living in my basement for 15 months, so I have no idea what people think of Real Vision in terms of adoption and recognition. I've already been recognized twice. Ash and I, we went for lunch to this place, the Capitol Grill. We went into the back of this room. It would turn out not to be our party, and then people looked at me and they said Real Vision, and then they saw Ash and they're like, oh yeah, definitely Real Vision. And we had a conversation with them. Exchanged niceties and talked about the crypto and the global macro environment coming together, potentially interviews, et cetera. And based upon that, Ash afterwards, he was telling me, you know what, I've been here literally 12 hours, and I said, you probably have like 3-4 interviews. He said, no, potentially 6 people that I've met who are interview worthy, who have something to add, from a crossover perspective between what's happening in the global macro space and what's happening in the crypto space.
Yeah, exactly. In fact, the first potential interview I met, I didn't even have to leave New Jersey. I came to Newark Airport, and the person behind me in line was a VC, and she said to me, so what do you do? And I said, I work at Real Vision. She said, I've got an interview scheduled with Haley Drasnan sometime next week. So, it's pretty incredible, I think, to be here. There is so much exuberance. I know I keep repeating it, but it's such an important point, I think. There's a feeling, I think, almost of a kind of a new world emerging. Look, everyone's been locked up. It's easy to understand how there's that false sense of the caterpillar emerging from the cocoon that can be pushing sentiment higher, particularly on the crypto side. But I think there are real opportunities. I think the diversity of the people we've seen here speaks to that point very clearly, as Ed points out, the union of traditional finance, traditional macro types of perspectives with crypto. We're going to be reporting back in some form or another over the next few days when we have more sentiment, more substance rather than simply just sentiment. I'm obviously going to be meeting with a number of people. There are a lot of things that are going on. I expect there'll be some new projects announced. There will be some new things that will come out of this conference, as there always are. I'm going to be keeping a special eye on price action, as I mentioned, because of the sentiment. But it's a really interesting place to be, and we're definitely going to come back to you with more substance over the next few days.
And that's it. I hope that you guys enjoyed what we have to say. We're enjoying it down here in Miami, and let us know in the comments what you want to hear when we come back from the conference.
Thanks for joining us. More to come.
And we're back. Weston, wasn't that interesting hearing from Ed and Ash?
I'm very jealous that they're there.
Yeah. Not so jealous of the rain. I'm glad I have a roof over my head. But Weston, Bitcoin obviously.
I have a roof over my head.
yeah. No, I'm saying I'm glad that we're inside. But Bitcoin and crypto, it's been consolidating since the very large sell-off of a few weeks ago. And there's actually a question from Claudio Delgado, who asks a question not from YouTube, but actually from the Real Vision Exchange, which is the engagement platform where you are the you do a lot of posting. You run that exchange. But Claudio, he has a question for you, Weston. He asks, in the past 24 hours, USD TRY, that is the US dollar to the Turkish lira, is at a 52-week high, and the uptrend seems to correlate with Bitcoin's bullish behavior. Weston, have you done any analysis to identify what's the breaking point for the US dollar Turkish lira with Bitcoin, and what seems to be a potential point of consolidation? So Weston, you've made a post about this exchange. So can you share your thinking in some depth, because I think it's important for people to understand.
Sure, absolutely. So I did write this. I think it's gonna be in the description, like the links for it. So the Turkish lira and the Bitcoin thing, that I went through it yesterday, and then overnight I just got a ton of more questions about it, which signals to me that there's a lot of people out there who do not realize that this is a key core driver of Bitcoin and gold, for that matter, non-fiat assets, not just Bitcoin, is the Turkish lira. The Turkish lira is a very, very important currency for several reasons, and it can be systemic and global of a problem. For many reasons as well. Most just very simply because if the lira basically continues to go downwards, there are several European banks in particular, like BBVA from Spain, that have a ton of exposure, and that might drag in like the ECB and all that, and then become systemic. But so to answer the question, it's basically in what I had written about, but the relationship, the correlation right now is that USD TRY up, BTC USD down, right? So in other words, if the lira is weakening, the Bitcoin would strengthen. That is not how it's typically historically been. Historically, for the last several years, throughout Bitcoin's like existence almost, it's been USD TRY higher and BTC TRY or BTC, whatever, USD, whatever, also higher. In other words, when the lira is getting destroyed, the Turkish citizens need to get out. They need to salvage their net worth somehow, and this is a very easy way for them to do so because they're already connected to crypto with the their early crypto adoption, and because of the fact that it's hard to buy gold and all that. So in November of last year, when the CBRT started to at least get the perception
Weston, what's CBRT? Sorry, can you explain that?
Central Bank Republic of Turkey, the Erdogan's head of HR, department for the central bank. They've gone through. They're on the fourth now head of the central bank in the last 3 years, and so the second of the fourth came in, and essentially he was seen as this markets guy, and he was seen as somebody who would be who would understand basic economics, like we raise rates to combat inflation, that doesn't cause inflation, things like that. And he did start hiking rates. And so Turkey actually, for a moment, starting in November of last year, actually got some credibility from markets that they know how to navigate monetary policy and maybe find their way out of this death spiral of the lira. And when that happened, that's when you started to see that relationship of lira down, Bitcoin up, that inversed. And from that point until basically a few days ago, that's how it's been. So when you see USD TRY going up, BTC USD would go down, and that would happen pretty tick for tick. That would happen kind of on a longer term chart and anything in between. But this past what is it, weekend, or this past week, the last few days, what you're observing is now a recorrelation back to how it's historically been. So what we're getting out of is not like a regime shift. We're just getting back into how things used to be all along, and that is when the Turkish lira, which is continuing to hit record lows, which does regularly. People are getting out and buying gold, which is why a large reason why gold is also doing well over the last month, as well as Bitcoin. So as far as technicals, I don't do like technical analysis. I don't really know from that end. But I will say though that it is very early to kind of spot like a major shift and like the polarization shift from inverse to positive correlation. So you'll probably need to like see a little bit more for that, and that could also switch on a dime again. But the standard kind of default setting is USD TRY or EUR TRY, or we'll quoted TRY JPY, but lira against other G5 currencies weakening means demand for Bitcoin and Bitcoin up. That's the standard default way, not what we've done over the last few months. That's basically an aberration.
So I think that the normal way of doing things, not the way it is now, but the normal way is that the lira weakens, and then that is a a tailwind for Bitcoin and gold, and that makes sense because as Turkish folks, as they see their currency depreciate, they seek a safe haven in gold and or Bitcoin.
They're just trying to get the hell out of their. They're just trying to salvage their. I mean, I feel terrible for them. Like, we don't understand what that's like. Like, unless we've lived in. I personally haven't. Unless we've lived in somewhere where you're seeing inflation. You're not debating inflation. You're seeing the destruction of the value of your life, really. This is like exiting a movie theater on fire, right? there are no limit orders, right? There's just a market order, like at any cost. So that's why you see like gold and Bitcoin, all that. Those were hitting record highs against the lira, like while BTC USD was still not even halfway back to its previous record high during 2020. 2020 was, if you read the article that I posted on the exchange, you'll get a good background about it. But 2020 was the year of the lira controlling fiat assets, or I'm sorry, non-fiat assets, gold, silver, Bitcoin, Ethereum, cryptocurrencies, all that. So it's just that people will take a look at that, and keep your eye on the lira.
We've got another question from Oliver Anderson, also from the exchange, and he wants to know, Weston, you've been so great at identifying flows, both for meme assets and non-meme assets alike. I love that sentence. I was wondering if you'd expand on how you identify where the flows come from, and if there are any tricks to figure out how other people might go after this.
All right. First, I want to say Oliver Anderson has a brilliant video on the exchange about. So he works in film, and he's literally a narrative creator, and he approaches he looks at markets and narratives through that lens as somebody who does that for a living. So it's really, really fascinating, amazing exchange contributor. Thanks a lot, Oliver. And thank you for that. Yeah, that's my approach. My approach is this. Everybody, like, not everybody, but I'd say most people, what they do is they'll look at the asset, right? They look at the stock, they look at the bond yield, they'll look at whatever the asset is, the cryptocurrency, and then they'll assign some sort of fair value to it, or a price target, or whatever. This should be at this price or whatever, right? That's not what I do, because the only thing that determines prices on anything, on any financial instrument, is just flows and behavior of the capital. Like, simply this: net capital in equals price up, net capital out equals price down. That's the only thing that determines it. Fundamentals don't determine it. Central banks don't determine asset prices. Regulations don't determine asset prices. Nothing determines asset prices except for the capital flowing in and out of it. So instead of looking at the asset itself, I turn around and I look at the source of and behavior of capital. And that is what kind of dictates me. So it's not like I'm looking at the Turkish lira for no reason, right? I'm looking at what the behavior of of people are, and what the overlapping sort of assets are, and that's basically where I start. And so I've seen, like, that's kind of how I am able to see things that seem extremely obvious to me, but that a lot of people just totally miss. I mean, I've just countless examples of them, but like, and every time I get pushback from them and some fundamental argument, then I know that there's alpha to be made in that trade, because there's some clown out there who's creating a wonderful, like, alpha opportunity. Yeah. So the lira is, like, I've been looking at that for like the last 4 years or so. But the lira I started looking at is because Japan retail traders are taking massively long leverage positions, going long the Turkish lira. Nobody else is going long the lira on purpose, by the way. It's just like Japan retail, but they're doing so because.
And Weston, can you tell people why they're doing it? They don't just love being in a currency that's very unstable. There's a reason, right?
Yeah, there's a reason that you and I did an RVDB after hours with. They have a clever marketing department with the cartoons and all that. But They do it because they look at nominal yields, and there's a 20% nominal yield spread between JGBs and Turkish Turkish yields. So they see that, like, so they'll trade the swap, and swaps, and for some reason, initial margin and like the on swaps for like Japan retail trading is like fractions that of if you were to do the same with like dollar yen or some completely non-obscure FX pair. So it's very easy to get sucked into it if you're, I guess, like Japan retail, because they're searching for yield. They've been yield starved here forever, and they're also very risk averse too. Like, because again, it's kind of like the meme stock trader. Like, there's Japan sitting on 40 trillion of household net worth, more than half of which is cash. Hence the deflation. But they have money to punt in the market, and this is partially what they do. And so I started looking at that. I started looking at that sort of behavior, and I started to realize that there was a correlation. And I started to realize that like Bitcoin and Nikkei had a correlation in 2017, starting September of 2017 to the very end of 2017. There was a sudden, out of nowhere, like 2,000 point, like almost 20% rally in Nikkei for no reason. And the reason was because all of these like new traders who came in via Bitcoin, sucked into Bitcoin, were introduced to financial markets and started going long, like leveraged Nikkei 2x, 3x leveraged ETFs. And at that time, Bitcoin had a higher correlation to the Nikkei than dollar yen did. And I would show that chart to, this is when I was like working in institutional finance, and I would show that chart to people, and some people got it, and some people were like, that's ridiculous. I'm like, it's not ridiculous. This is like, I didn't draw this with my hands. Like, this is what's happening. But so there are people, and then those people, because those people exist, I know that there's like, some, if I could find some way to exploit that, there's alpha out there. So yeah. I know this is a very long answer that really gave nothing, but I'll give some examples.
No, that was important. And Weston, that chart on Bitcoin being more correlated to the Nikkei than dollar yen was, that is fascinating. And I can imagine people saying, like, you're just like you're just a chart guy, and you just searched 100 different things and you found the one thing that looks strange. And I feel like often when there's a brilliant chart, like the most brilliant charts, and they're new and they enter the foray and people don't really understand them, those are the charts that are most susceptible of being accused of chart crime. So I'm not saying that chart crime isn't a thing, but I think that sometimes that allegation of chart crime has been bandied about perhaps a little bit too loosely. Weston, I'm glad you talked about flows. That obviously was on my mind today with the insane volumes that we saw out of AMC and Workhorse. In fact, and we can put this chart up. AMC was the most traded stock in the entire Russell 3000. That is a very large basket, and that is the most single traded stock by a factor of almost 3. And by the way, number 2 is a very small stock, GTT Communications, which I've never heard of, and number 3 is Workhorse. So, Weston, what does it mean to you when the most traded stocks are these meme stocks and not, say, the typical dominators such as Apple, the FANGs, and the like?
So there's actually, by the way, AMC, that's actually it's more than SPY, so it is the number one, but including the ETFs as well. So it's
and SPY is the ETF that's for the S&P 500. Yeah. So it's bigger even bigger than I said. Yeah.
It's crazy. Yeah. So what does it mean? Okay, so there's this momentum ETF. There's a few of them. The biggest one. The biggest one is MTUM. There's a few, like I think JP Morgan has one. There's like 3 or 4 of them out there. These momentum ETFs are momentum ETFs, and so they basically are benchmarked to MSCI, the momentum index, which had a rebalance. I think like, I don't know, maybe 5-6 trading days ago, somewhere around there. The rebalance was pretty significant because when we usually think of momentum, like Jack, what do you think of when you think of like momentum stocks?
Things that are going up. Things that are going up.
Yeah, but like what specific stocks over the last like couple couple of like years, what you would say? Apple.
Easy, yeah. Big cap technology growth stocks, not value stocks, not financials, not energy at all. But Weston, it's my understanding that this is now no longer the case.
No longer the case. Okay, so I'm looking at it right now. They did a rebalance. So financials. Okay, financials used to be 1.6% of the index. It's now the top at 33%. And then at the same time, tech, which used to be 40% of the momentum index, is now less than half of what it used to be. It's at 17%. Notably, within tech, Apple, Microsoft, Adobe, NVIDIA, these are all previous top 10 holdings within this particular ETF and this index and everything that's benchmarked to this index. Apple, Microsoft, Adobe, and NVIDIA are no longer at all represented. They have the 0% weighting. They're not in the index at all. Consumer discretionary, Amazon and Nike, those are both out too. Instead, what we have is JP Morgan, Berkshire Hathaway Class B shares, Bank of America, and Wells Fargo are now in the top 10. Energy sector, which had a 0% weighting previously, now has a 2% weighting. So, this like, you know, this financials and energy like outperformance on the year, while it may seem like you might have missed the upside because you're looking strictly at the price like outperformance doesn't necessarily mean that it's crowded. I'm not saying that it is or isn't, but you shouldn't look at it that way either. And that there are a lot of people that are probably very skeptical to go long financials or go long, you know, energy, especially with oil at 70. Like, how much further could it go? How much further can the yield curve steepen for like net interest margin on banks and this and that? But you know, now that it's in this like ETF, should this ETF continue to get inflows, you're going to see it's very interesting that you're going to start seeing the financials and energy like outperform. But because of the weighting of SPX, the index itself is probably not going to do anything. It might even be down. So you're going to get these like, you get huge outperformance if you're looking at beta versus the index, and like, you know, like JP Morgan or a Bank of America or whatever it may be. Versus SPX, which might just be down or flat because their big heavyweights got booted out. Like Google and all that's still in there, but like this was a very significant rebalancing, and it's no longer just kind of fund managers individually like saying, yeah, we like growth over value. I really hate those like overly generic categories, but it's no longer that. Now it's like grouped together in this ETF. It's you know, whatever billions AUM. And so now it's going to manifest in markets.
Yeah, and I think if you look at the high beta ETFs, there it's even more stark, where you have energy, which used to be 0 or very close to 0 as part of the high beta index, and now it's something like 18 or 19%, and that really is crazy because energy is a small fraction of the S&P 500. I think it used to be 1.5% if you take the XLE relative to SPY or just of that sector. And now, of course, it's much bigger because we've had that rally. But it really speaks to the momentum and the size, the strength of the rally in financials and energy, that you've had tech titans like Tesla trade down and trade much more down today as it happens. And things like Apple have traded sideways. Yes, Google has been up, and there's been
Apple's in a bear market, right?
Yeah, I mean, I don't know what the year-to-date performance is, but basically the big players have not been lifting the index up. It really has been the little guys at the bottom, the energy stocks, that have really been leading the charge. Weston, my question for you is, we now have a very accurate snapshot of the past year in price action. The baton was handed from tech, let's say, to SPACs, and now it is firmly in the hands of energy and financials. Weston, what, if anything, can we interpret from this going forward? What does this tell you about perhaps new incentive structure for fund managers, or is this really only a historical snapshot and we can't look forward?
We can never look forward. So like, I don't know what's going to happen tomorrow. I don't know what's happening presently, right? I don't know what to make of this. Like, what I'll say is that I think that because of this. And first of all, this only works if there are continued inflows into the momentum ETFs. that are benchmarked off of this particular index, of this MSCI index. But should that happen, I mean, you're gonna get every year is the worst for active management, but this is gonna be especially bad for active management because, I mean, how many fund managers are willing to go long, like energies or financials or any of these, right? Like, everyone, you have to hold an Apple or
I actually don't know about that, Weston, because Apple and Google and Facebook, because they're such a huge part of the S&P 500, if you run an active strategy, then you're most likely going to be actually underweight those names because no one's going to pay you 2 and 20 or whatever to just own Apple. So I actually think that from what I've read, like Corey Hofstein's paper on liquidity cascades, is that active managers tend to be underweight the FANG. So actually, active could have, they could bloom in the desert, so to speak. But
does he address this term closet indexing?
I don't know if he does in the paper, but I'm sure he knows what that is. What is closet indexing?
Closet indexing is basically you haven't done your job as an active manager, which is to beat the index, because your fundamental analysis, like Excel spreadsheet, sort of 5-year DCF modeling and all that is no longer relevant, and you decided to not own Apple, and then they, come out. This is what, like in 2019, like towards the end of 2019, Apple's been underperforming all year. Suddenly they come out and they show that we have done like 10% of our buyback when you have billions left, and then everybody rushes to Apple, and then Apple just has a massive outperformance because you have to own it, because if you don't, it's your job, and you have to own it by the end of the year too. You have a lot of underperformance to make up for. So. But what I'll say though is that I think that if you actually have this strategy of going long, one of these sort of non-FANG large cap names that are under-owned and relatively good value and all that kind of thing, and then you short the index, which is what a lot of hedge funds do. The index is no longer going to be this unconditionally up thing because it's dominated by the Apples and Microsofts and all that. The SPX might, like E-minis, whatever it may be, might actually perform like a somewhat of a normal broad-based index rather than a cluster of 5 or 6 tech stocks and then 495 miscellaneous stocks, in the other half. So long single name, short the index might actually finally work as a standard strategy.
Yeah, Weston, we've run over time. It's been an absolute pleasure. There are some topics we haven't had a chance to touch, like the Fed taper talk, the Fed selling its corporate bonds.
We addressed that yesterday, though, right? And then what happened, right? Like the LQD is fine today, right? So.
Yeah, that's true. I mean, who's worried about corporate bond default risk? I don't even know if bond portfolio managers are. They're thinking about interest rate risk, but credit default risk is just like a kind of an afterthought. Of course, I'm being a little bit hyperbolic. But we also didn't talk about European bonds, and we didn't talk about the very shrewd trade that existed in Workhorse. There's a call spread that some shrewd traders noticed a dislocation there. Weston, perhaps you and I could talk about that in the Real Vision Exchange after hours, which we'll film right after this.
Yeah, indeed. I'm happy to do that. If we have exchange questions, I'm happy to take them there too. So.
Brilliant. Well, thank you so much, Weston, and thank you to everyone who is watching, whether a Real Vision member or if you're watching on YouTube. Thanks so much, and we'll see you soon.
Thanks, everyone. Thanks, Jack.